Let's move on to Pinterest, because Pinterest is next in line for the anticipated IPOs. We don't have a date yet. They filed their S1 a couple of weeks ago. Now they've come out with their price range, and they've set the range at $15 to $17 a share. On the face of it, that seems reasonable.
It's super conservative.
So let's talk about that, because it's conservative to the point where the last time we saw numbers regarding what is Pinterest worth on the private markets, if they hit this range, they're going to be valued in the public markets at around, up to $9 billion for the company. That's lower than what we saw in the most recent valuation on the private market.
It's a little bit lower than, I believe the number is actually $11 billion, and that this would value, and the last round was at $12 billion. So you don't usually see companies coming out and telling their last round of investors, ooh, you're going to take a little bit of a haircut here. This is not great. And honestly, it seems odd to me, because this is a really great company. Like, I had not thought a lot about Pinterest. You are not the target person for Pinterest. It's 2/3 female. About 8 in 10 mothers in the US are on Pinterest, but they don't have a lot of debt. The only thing you could argue about Pinterest is they've been so conservative with spending capital that does constrain, the massive growth, but their advertising numbers have gone up 60% in the past year. And really, even just in the last quarter, they added 41 million monthly active users from a base of 250 to 291. That's stunning.
Do you think on any level what we saw play out with the Lyft IPO factored into how Pinterest set their price range?
I think when you're a company that's very careful with cash, perception matters. So are they going to cost themselves a little bit of money by pricing low? They are, but they also will put it out there at a place where they're more likely to get that first wave of stories about the IPO being a mild success, instead of what you're having with Lyft, when you would think Lyft went to 2. Right. Instead of Lyft being down, whatever it is, 10%, a couple of dollars in real world, the stories on it make it feel like it's been a disastrous IPO and Uber should just not IPO.
Well, when you think about, as you said, how conservative Pinterest has been managing their money, maybe this price range makes more sense, particularly if the attitude they're taking is, look, we know what our numbers are. We know what our strengths are. By the way, we know what our growth has been. And we see the projections in the digital advertising market. And look, they're not Google, they're not Facebook, and they're not Amazon, as we talked recently on Motley Fool Money about Amazon building up their digital ad business. But Pinterest has their niche. They're doing it well. And if they look at that growing digital ad market and say to themselves, we don't need to get the biggest slice of pie, we just need to get our slice of the pie, they're going to be fine.
And the ad market, as you said, it's growing. So they have a strategy to get more advertisers. They're under-indexed on small businesses, and that's an area where Facebook does really well. So they can sort of organically take the audience they already have. They actually have to be most protective of their community. They have a niche. It's closer to LinkedIn than it is to Facebook. So when you look and say they're speaking to women, they're speaking to people, they have to make sure that their advertising doesn't overwhelm their content, because it's great. If you're on Pinterest and you search for a recipe and you get the recipe, you don't care if it's from your next door neighbor or for someone who has a vested interest in selling you, a particular brand of flour, as long as it's a good recipe. So it's really about protecting the content experience. And they have a sort of unassailable audience. Facebook can't easily take this. Twitter, Amazon, as long as they put the customer first, which we've seen is something Facebook did not do.
And right. And let's be clear, when we're talking about flour, there's only one choice. It's King Arthur flour. That's just,
I couldn't have named a brand of flour if we had talked for an hour.
Oh yeah. No, it's just King Arthur. In terms of IPOs, is this something that you look at and you think, I want to get in, if not the opening day, as close to the opening day? Or are IPOs something that you say, I don't care how excited I am by the story, I'm waiting 3 months to see how they do?
So I hadn't given a lot of thought to Pinterest as a company before you brought up talking about it on the show. And I'm actually super impressed. Like, normally, I agree. IPOs are about hype. They're much more about, what happens to a stock the day after earnings are reported and someone reads the first line of the earnings report and the stock goes down 10%. But I look at the fundamentals of this company and I can't disagree. When you read the risk section, which you've read those, they're always preposterous. It's like, what if all of our executives are eaten by bears? The internet could go away. But the actual risks to their business are fairly minimal. And when you're this conservative with capital, they only lost $39 million last year. Do you know how much Lyft lost?
More.
$1 billion plus, or 800 million, or some stunning. I think Uber, it's 1.8 billion in the last year they lost. So this is a company that has been growing and slowly cutting its losses. So let's say there is a zig in their business. Something changes about people's trust in online advertising. So they'll have a down quarter and figure it out. It's kind of like the Costco model, but brought across to the internet. I know it's a weird thing, but like Costco goes a very slow and steady. They didn't jump into digital. They looked to see what everyone needed, and then they gave their customers just enough. That kind of is how Pinterest is operating, and I like that a lot better than the we make money when we grow 50 times model.